Coming up on Market to Market, President Trump softens the hard line on trade. Inside a prison dairy operation that yields outside benefits. Those stories and market analysis with Mark Gold next.
Week or so.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at AccuSteel.com.
This is the Friday, February 15 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. The gift Americans gave to retailers during the holiday season was a few sizes smaller. Retail sales in December fell 1.2%, the biggest drop in nearly a decade. Core retail sales fell 0.9% after fuel prices are taken out of the equation. The Consumer Price Index was flat in January. The annual inflation rate did reach 1.6%, staying close to the Federal Reserve's target of 2%. Without the volatile factors of food and gasoline, core CPI increased 0.2% in January, continuing a 5-month run. President Trump used a Rose Garden speech on Friday to declare an emergency at the border between the U.S. and Mexico. During his remarks, he made note of improving trade talks with China. As the anniversary of steel and aluminum tariffs approach, many are optimistic a deal with China can be reached. John Torpy has the details.
Investors on both sides of the Pacific had shown some optimism after trade officials from the world's two largest economies opened high-level talks in Beijing. President Trump has said he might move a rapidly approaching March 1 tariff deadline if negotiations prove to be productive. Chinese trade officials had pledged to begin buying U.S. soybeans, but a late-week cancellation of 807,000 metric tons, nearly 30 million bushels, capped several months of minimal or non-existent sales.
I could live receiving billions and billions of dollars a month from China. China never gave us 10 cents. It was always the opposite way. Now they're paying billions of dollars a month for the privilege of coming into the United States and honestly taking advantage of our country. So we'll see how it works out.
The trade war with China got hotter last July when President Trump laid down tariffs on $250 billion worth of Chinese imports. The move was in retaliation for China's alleged pressuring of U.S. companies to hand over trade secrets and technology. This was coupled with complaints of corporate espionage against Chinese manufacturers. Currently, the U.S. tariffs on Chinese goods are pegged at 25% on over 800 items. If a new trade deal is not reached by March 1, import taxes will increase by $200 billion. Even with the tariffs in place, China's exports in January rose almost 10% from a year ago. At the same time, Chinese imports of U.S. goods have dropped by over 40%. At the end of Friday's session, both sides agreed to extend the trade talks and meet in Washington next week. There was no indication from the White House if the looming deadline would be changed. For Market to Market, I'm John Torpy.
For decades, prison officials have tried varying methods to reduce the number of returning inmates. An approach at one facility in rural America is to teach skills on the inside that can be applied to farm work on the outside. Peter Tubbs has more in our cover story.
I've never had to teach people before, and I've been able to experience that here, so that'll help me out there. I was never willing to do it before.
It's easy to mistake this farm on the edge of Waupun, Wisconsin for one of the thousands of dairy farms in the state. The reality is that the workers here are inmates in the Wisconsin prison system, and their tasks are twofold: produce milk for other government facilities and prepare for their lives once they are paroled. It's as much a school as it is a farm.
We provide inmate workers with opportunities they can use to better prepare themselves to succeed in the institutions and when they return to their families and communities. Those are opportunities to work, to learn, and to earn.
Maintaining a herd of 1,100 dairy cows requires 300 man-hours each day. Spread across 2 shifts and 33 inmates, the 400 milking cows are milked 3 times per day, and each animal yields 80 pounds daily, a rate above the industry standard of 66 pounds. For the Wisconsin Bureau of Prisons, the milk is the primary revenue stream, the routine a byproduct. In accordance with Wisconsin Bureau of Prisons policy, current and former inmates are identified by only their first names.
There's always that stuff, but it's just go with each day and work through it and get it done, and it's all about making the whole thing function. I'm just a small portion of what really goes on here, so a lot of people out here doing a lot of different things and working together to get it all done, manage it appropriately.
Prison officials believe the agricultural work, planting, harvest, and hands-on with animals, prepares inmates for life after their eventual release. Former inmates confirm the experience being good for them on the outside. Fernando currently manages a retail store.
I liked it because it put me, it was like a discipline, instead of just sitting around and not doing nothing, I put myself to, getting myself used to, that way when I went back to society, I was not going to just be wasting time and, doing something about my life, with my life.
Mark is now working construction.
Another thing was good was even working with the weather, because no matter what, if it's rain or shine, everyone has to be here at the farm. And it's not a 7 to 3 job. It's a 7-day-a-week job, 365. So to be here and to show up on time and stick it out, and there's a lot of hours. I guess I learned people more than anything, different people, because when you're out here, you have to work with a lot of different people, maybe people that you would never normally in your life be around, and you can't exactly just walk away from them, so you better figure out a way to work with them. And when you can work with them and everybody gets a job done together, it is pretty good.
While many of the inmate workers walked in with job skills, Ray often sees the soft skills of seeing a job to completion and working with others as the most valuable lessons learned on the farm.
We like to say they learn general work skills, how to get to work every day, to get through the day in spite of challenges with people and equipment, and to get work done, to be persistent and not just spend time.
Milk processing takes place a few miles away at another Bureau of Prisons facility in Waupun. The facility packages milk in half-pint boxes and 5-gallon bags, and also produces over 28,000 gallons of ice cream and sherbet each year. The dairy products are sold to government facilities in Wisconsin and Minnesota, and the revenues support the larger mission to train inmates for future jobs.
On the outside, I'm a cook, but it was nice to see the other part of this. And I'm actually from the 3rd dairy state, so this is something that I can try to, go into out there and, like a transferable job skill. So just learning something different and coming out of this with a new job skill was, pretty good for me.
While the Bureau can only bid for work from other government agencies or nonprofits, it is expected to be financially self-sustaining. Profits are spent on improving the operation of the various facilities.
We submitted a number of bids and we are not the winning organization, so we have to learn from those losing bids, modify our product, modify our prices, modify our delivery schedule, and get back in the game the next time we get a bid.
In addition to fulfilling the dairy needs of Wisconsin state government, inmates who work for correctional enterprises return to prison at a lower rate than those who do not perform work outside the prison walls. While only a few percentage points over the average, more than 2/3 of correctional enterprises employees never return after being paroled.
So we have a .690 batting average, and we're excited to talk about that.
Some former workers on the dairy farm find work within agriculture, but most transition to other jobs in the Wisconsin economy. For those who have been through the program, the lessons learned on 1,500 acres in central Wisconsin are about life as much as agriculture.
I mean, a lot of the guys never have even worked in a farm, and by them coming here, they learn that it's okay to get your hands dirty, you know, and do something for the right cause.
From Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
Nearly a week of no news from the China-U.S. trade talks, and a major order cancellation pressured the grain markets lower. For the week, March wheat lost 13 cents, and the nearby corn contract went through a 10-cent swing to finish flat. China's change of heart on 800,000 metric tons of soybeans and an increase in yield numbers for Argentine crops pushed the March contract down 7 cents. March meal added 40 cents per ton. March cotton plummeted to $2.33 per hundredweight. Over in the dairy parlor, March Class 3 milk futures lost 6 cents. The livestock market was mixed. April cattle cut 75 cents. March feeders shed $1.50. And the April lean hog contract put on $1.10. In the currency markets, the U.S. dollar index rose 32 ticks. March crude oil gained $2.87 per barrel. COMEX gold gained $3.60 per ounce. And the Goldman Sachs Commodity Index added more than 7 points to finish at 412.85. Joining us now to offer insight on these and other trends is one of our regular market analysts, Mark Gold. Mark, welcome back.
Thanks. Great to be here again.
Great to have you on the show, Mark. We've got a pretty good question here. I think just to start right off the top, a social media question from Ben in the metropolis of Jessup, Iowa. When does Mark think at least once a year the market gives you a chance to sell at a profit might occur, and at what price for corn, soy, and wheat?
Well, I think that's a great question. In the last 3 or 4 years, we've seen those highs, May and June in that time frame. We're going to need to see something a little bit more dramatic, I think, which could take us into the June, July time frame. I think it's going to be a weather event. We haven't seen, if we can get something done with China, we might get a first spike. Where can those levels go to? Certainly if we can get corn up to 430, new crop corn to 430, if we can get new crop beans 1040 somewhere in there, 1040 on new crop beans, that'd be realistic. And, wheat, if we can get wheat up to 540, 560, I think that'd be a legitimate opportunity here. But if we're really going to see a nice jump, I really think it's got to be a summer weather. The Chinese news, I think, will only take us so far because we still have big carryouts.
Well, we definitely got a lot of questions about the Chinese trade negotiations going on this week, and we're going to talk about that here in a moment. But let's talk about the wheat markets. They had some big swings this week. Thursday, they lost quite a few cents off the board. What happened on Thursday to spark that news?
Well, the dollar's been strong. That certainly doesn't help. We did a little bit of export business with Egypt, which is a real positive. We haven't really seen that for a long time. But still, the crops around the world are looking better. We don't see, it's been all about talk about Chinese demand. Are they going to buy wheat? And then when we had the announcements that the trade talks they were very far apart, that really hit the wheat market hard. And unfortunately, we're getting down to some very tight levels. If we start closing a couple of days under $5 on the nearby contract, I believe it opens up the door for some lower prices.
When you talk about exports, obviously we're waiting to see kind of on the Chinese deal, but USDA has this at an 11% increase from last marketing year. However, from the January 3rd report that came out, we saw that we're actually running 10% behind. Are we going to be able to get back ahead and meet that USDA forecast?
It's going to be tough. We've got a smaller window to look at. When you look at some of the things like corn and sorghum, there's some projections out there that the Chinese are going to dramatically increase their imports of those commodities.
I know those are private expectations?
Private, strictly private expectations. We don't see that necessarily in the beans, but we certainly expect a big increase if we can settle the trade deal. Are we going to pump it up past 10 million metric tons? We're still so far behind, and we've got such a big carryout. We're still looking at a 910 million bushel carryout in the beans. We need something to lower these numbers, whether it's the Chinese coming in or whether it's some kind of weather event. Losing a couple of million acres isn't going to make a huge dent in those carryouts. So we need to see something dramatic happen.
So talking a little bit more about the USDA export sales and whatnot, we're going to see kind of a data dump next week with January 3rd up until this week's export sales. Are you expecting to see a lot of volatility with all that information coming into the market at once?
Well, we had that surprise cancellation. So certainly if we get all of this information at one shot, you know, it's going to take a little bit of time to sift through it. But I would expect, if I was a guessing man, I would say that the soybeans will be a pretty good number. We've seen some good export sales on the daily numbers. We haven't seen it so much in the corn. This week in the corn, I think we had a little over 400,000 metric tons going to unknown. We assume that's China. We believe they've been sniffing around looking for corn. But I think hopefully the big change will be in a big total export number to China in the beans, which could bring that carry out from 910 to some at least slightly more manageable number.
Do you have any guesses at that slightly manageable number?
I really wouldn't want to take a guess. You know, could it be 150, 200 million? It could be, considering what they bought over the last 4 or 5 weeks. The cancellation bothers me, so I don't want to get too optimistic, but hopefully we'll see. But no matter what it comes out, if it's 600, 700, 800, it's still an awfully big number compared to where we've been historically.
Did this week's cancellation in the soybean markets have an impact in the corn markets? Because not only did wheat have a bad day on Thursday, so did corn and soybeans. Is that what pulled the corn markets down?
I think, you know, the soybeans and the wheat were enough to pull the corn down. We had some sales there, which is positive. The corn's been just stuck in this range from
absolutely.
370 to 383, in that range. We need something dramatic to shake us out of it. Hopefully it'll be to the upside.
But if we don't, let's talk about the scenario if we break through this 370 and that resistance level there. Are we headed lower after that?
Well, if you're just a technician and you look at these kind of 370 in the corn, $9 on the old crop beans, we start taking out these numbers and $5 on the old crop wheat. Technically, these are weak levels that certainly in normal markets would open up the door. But what we've seen in these markets is every time we get some bad news that forces us into a bad close, there's a reversal of comments within 24 hours and the market's rally right back. If you were trading this market over the last 3 months, 2 months, you've had at least 7 good opportunities. When the news couldn't be any more bearish, the market sells off. If you'd buy it, wait till they make some bullish announcement that everything looks great and sell it. You had all these opportunities in this volatility, but it doesn't help the American farmer in the long run.
When you look, Mark, then at those opportunities, should producers be looking at opportunities for new crop corn and soybeans, even if we don't have planting estimates yet?
And no matter where the opportunity comes from, we need to be cognizant and be willing to sell some of these rallies. Again, if we can get new crop corn, 430, 440, new crop beans, 1030, 1040, in those ranges, you certainly got to be looking forward to selling more grain. Because if we do have a decent crop, a big crop here in the U.S. this summer, these carryouts can just be so burdensome. And, you know, we've seen so many problems in the farm economy. The bankruptcies are moving higher. We know that farmers are in trouble. We know credit is an awful lot tighter than it's ever been, or at least since the 80s. So we want to keep farmers out of trouble here. So while we're waiting for these good opportunities, there are some short-term puts, a May put, a July put, 10 cents in corn, 20 cents in beans. Are they great? No, but if there is a real sell-off here because we're expecting a big crop, we don't get a Chinese announcement, it could really be saving the day for a lot of folks.
Okay, so speaking of a Chinese announcement, we have a question I think specifically touches on the lower end of that. Ethan in Maddock, North Dakota said, could we potentially see new lows if no trade agreement is reached with China?
Absolutely.
How low are we going to go, Mark?
Well, if you look at the charts, there's an awful long way down.
We talking $1, 50
yeah,
cents?
you know, I think you're talking 50 to 70 cents in corn. I think you're talking $1 to $1.25 in beans. There's still an awful lot of risk. And if that happens before we get into the summer markets, and it looks like we've got a big crop, you can extend those even farther down.
When we looked at weekly export sales for the January 3rd week there, we had a net negative for export sales. How much did that shock the trade this week?
I think that was certainly a good part of why we moved lower.
Okay.
And again, with the trade talks not at that minute not going well and they saying that they're far apart, it was enough. Now, we've had these kind of announcements and these shocks. The market goes down, and miraculously, it just seems to come back. We get a positive announcement. We're just in this cycle. So even if we do start closing under these numbers, I think you've got to be careful, which is why the put option, I think, is such a valuable tool here. You can spend the money. If we do go higher, great. You'll lose the money on the put and sell grain at higher prices. But if there is a bigger problem coming between now and, let's say, mid-July, if we've got a good crop here, those puts could be very valuable property 4 months from now.
One final soybean question for you, Mark. Even as we look at the lower prices we've been having here in the U.S., Brazil's soybean prices seem to be a lot more competitive. China's turning to Brazil. Yeah. Are U.S. soybeans then going to have to lower to meet that competition, and will they lower? Well,
we know that the Brazilian crop is big. We also know that it's been moving to the lower side. The latest USDA estimate was 117. CONAB came out under 116, and a lot of people think that number is high, and it could go 114, 113, 112, somewhere in that range. So, yes, they're going to export a lot of beans. They're about a third of their way done on their harvest. It's prime time for them to be selling grain, and that's going to be the natural seller to the Chinese. We're losing our window of opportunity every day that goes by. But that being said, it doesn't stop the Chinese if they want to build some stocks, if they want to buffer themselves and buy some grain at cheap prices. They could come in and buy things that we wouldn't normally expect in a time frame we wouldn't look for. So, hopefully lower prices will generate demand worldwide for soybeans.
Is that going to be the case for the cotton market? We've seen them drop $2+ this week, $1+ last week.
The cotton market, it looks like they're going to pick up some acres, and I think that's really what's behind all this. When you look at the profitability and the return on investment, cotton isn't bad compared to certainly soybeans in a lot of areas. So I think the trade is telling us that we're going to get more cotton acres out here, and obviously more acres, possibly more production. And we've been, that 80-cent level historically isn't a bad level. We've backed off of that, but there's still a lot of risk out there with a big crop. So, certainly, again, we'd be a little bit on the defensive side and want to protect it with a put in case we do go lower.
Mark, you know what my next question is going to be. Acreage, how many acres are cotton going to steal away from soybeans?
I think it'll be 1 million to 2 million total, whether it's going to all come from soybeans or, could come from sorghum or even wheat acres. I think they're going to pick up a couple of million acres. It wouldn't surprise me. I'm not sure we're going to lose as many bean acres as we would think we would. The talk has been 4 million acres. I think we're closer to 2 million acres. I think corn will move up a little bit, but I think there's some economic returns in place that soybeans are still favorable out here. The bankers will probably want to lend more money on soybeans because of the lower costs. So I don't know that soybeans will lose all that many, and how much of that's going to go into cotton or corn, we really don't know yet.
Mark, seasonally, live cattle hits a top at the end of winter. Is that going to hold true for this marketing year?
Well, this is the week that we made our highs last year, and we've been bucking up against that 127, 128. We saw the fat cattle drop $1.50 to 123.50. Everything tells us, when I was here in December, I said, we could be at a high here. I think we're around 124. We've rallied at a couple of dollars past that, which is fine. But we still view that the cattle market has got a lot of risk. We know that moving forward, we're getting more animals come June and August. And the demand has been strong for the cattle. The Dow Jones is held in there. When we see the Dow Jones back off, we see some problems in the cattle industry. The Dow Jones has rallied significantly since February 1st, and I think that's helped the cattle market. But I think the market's a little soft here. We make these seasonal highs, and certainly at these levels, we would certainly be looking to buy some puts to protect the downside.
What about in the hog market? What's the story there?
Well, do we have any kind of a China deal? Every time we seem to think we do, the hogs can rally. Every time we don't, the hogs break. we've had this big discrepancy between the spring hog prices and the summer hog prices. I think those are legitimate spreads for the time being. Can summer hogs move up to that $85, $90 area?
Mark, I'm going to save that for
Okay.
Market Plus. We're
Okay.
going to continue with that
Okay.
discussion right off the top. That wraps up the broadcast portion of Market to Market, but we will keep this conversation going on Market Plus, where we'll answer that question and more. You can find it on our website at markettomarket.org and check us out on Facebook, where we posted a classic episode of Market to Market. Give us a like to see more. Join us again next week when we'll take an in-depth look at trade ahead of a major deadline. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.